Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day.
रामू दो चाय दे यार।
अरे नहीं यार, एक चाय कॉफी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का होम लोन, I agree with you.
SBI is the banker to every Indian.
From using those bulky magnifying glasses and calculators to employing artificial intelligence and automated data processing, the income tax sleuths have indeed come a long way. With a click of a button, they can now trace all the transactions given that they are not Benami. And recent changes in the reassessment regime has given them the right to probe any unexplained income or expenditure worth 50 lakh rupees or more done in the last 10 years. Watch out our next report to know more.
Announced in the recent union budget, a clutch of changes in the reassessment regime has come into effect from April 1. One of the prominent changes has caught the attention of individuals and corporates, and they have been rushing to their CA for more clarity. The change has extended the scope for Income Tax Department to reopen past assessments. In the earlier regime, misreported or underreported income in the form of an asset above Rs 50 lakh could have triggered a reassessment of the past 10 years. Now, the department can go back up to 10 years to scrutinize the finances of a company or an individual if the aggregate income or unexplained expenditure or entries in the book that escaped assessment over the multiple years is Rs 50 lakh or more. If the escaped income or spending is below Rs 50 lakh, then the limit for reopening of assessment has been halved to 3 years from 6 years. Unexplained expenditure includes money spent on a big event or occasion, expensive assets, and so on. If the department finds out that a taxpayer had an unexplained expenditure, it can send him or her a notice seeking an explanation and also may reopen the assessed return. The department can reassess the income or expenditure in case of an objection from any audit, information from foreign tax authorities, observations in a tribunal or a court order, besides relying on the data flagged by the Central Board of Direct Taxes' Risk Management and the Comptroller Auditor General of India. The department's Insight platform also helps tax sleuths hunt for potential tax evaders. The Insight portal processes data from various reporting entities.
The time limit was that of 4 years from the end of assessment year. In exceptional situations, then that time limit of 4 years could move to 6 years. What constituted reason to believe for an officer to reopen or reassess a matter has been interpreted by various courts. You cannot say that a reason to believe is equivalent to a change of opinion. The new provisions completely do away with the concept of reason to believe. The new provisions essentially say tax authority or the tax officer has information which suggests that income has escaped assessment. A reassessment proceeding could be initiated. The government has tried to clarify and be specific in terms of, what is it, what you mean by information. The timelines have changed, under the new regime, and that has been brought to 3 years and 10 years. I beg pardon. When I say 3 years, it is 3 years from the end of assessment year. In exceptional situation, the timeline of 3 years extends to 10 years, and it has been categorically spelled out in what situation does that before the 10-year timeline can be triggered. First is that the assessing officer has to be in possession of the books of accounts and other documents which reveal that income chargeable to tax has escaped assessment. The second is that such escaped income should be represented in the form of either an asset or an expenditure in respect of a transaction, or in relation to an event, or an entry or entries in the books of accounts. And the value of all of this should exceed 50 lakhs. But the way the letter of the law reads today, this 50 lakh is to be computed cumulative and not per year. The second important aspect here is also that It's not sure whether this threshold of 50 lakhs would be each of the category, but I think this 50 lakhs has to be viewed cumulatively. So for the year ended 31st March 2020 and all the years prior to that will still be governed by the old regime.
As many as 5.52 crore individuals filed income tax returns during the assessment year 2018-19. Out of these, about 77 lakh people showed a gross total income below 2.5 lakh rupees, and 2.72 crore individuals disclosed income between 2.5 lakh and rupees 5 lakh. Income of 1.47 crore people was between 5 to 10 lakh rupees, while more than 52 lakh individuals had income between 10 to 50 lakh rupees. Nearly 2.1 lakh individuals had shown income between 50 lakh rupees and rupees 1 crore, and only about 98,000 people had a gross total income above 1 crore rupees. Going by the Income Tax Department's data, there were only about 3 lakh people in India with income of more than rupees 50 lakh in the assessment year 2018-19. Kuldeep Kumar, partner at Pricewaterhouse & Co LLP, told Business Standard that considering the 10-year timeline, taxpayers should carefully make the required disclosures in their return forms to avoid notice. He said that taxpayers should also keep relevant documentary evidence related to their large financial transactions to avoid any inconvenience later on. Rahul Charka, partner at Economic Loss Practice, says that taxpayers should maintain consistency in the information submitted to authorities, like reconciliation between GST and IT returns before submission. He also suggests taxpayers to maintain documents of high-value spending, including those made on credit cards over the years, as well as records related to property deals.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
In another major change, the government has allowed undergraduate and postgraduate students to pursue 2 degrees simultaneously in the physical mode. Let's understand what this means for students, their course load, and their employability.
The University Grants Commission, or UGC, has notified guidelines allowing undergraduates and postgraduates to pursue 2 degrees simultaneously, except for the PhD courses. The students will now be allowed to take up specializations in 2 disciplines of their choice, say maths and history, in either fully physical class mode, a hybrid of physical and online classes, or fully online mode. And the step taken by the government seems progressive. Let us say you are a high school student who is unsure of whether to pursue the sciences or humanities in higher education. Then this policy should be of help to you. Till some time back, graduates in conventional science, technology, engineering and mathematics, or STEM, were the main targets for recruitment, especially by tech and IT companies, which offer some of the most lucrative careers. STEM, of course, has retained its importance. But today, global IT giants have widened their recruitment focus to those with multidisciplinary exposure. Today, STEAM graduates, where the A stands for arts, are increasingly in demand in the world's largest companies. And this demand will grow hand in hand with that for lateral thinking in a world where competition is cutthroat. In essence, future Indian students will see their employability rise thanks to interdisciplinary study. This also gives students the opportunity to focus on one mainstream undergraduate degree while enrolling in another one that has a vocational focus.
A student can acquire multiple skills and have a diverse knowledge base which has the transversible and portability impact, which means that the probability of a person to first of all pursue the career of the interest obviously improves, but also the fact that the probability of finding a job in the labor market also doubles up because of this this diverse knowledge base which the youth or the student would carry with him. And with the kind of changes or the dynamic nature of a labor market, I think this would really help the youth to become more employable in the labor market. However, one must be really cautious here that while pursuing this double degree programs, both the institute and the student have to be really cautious to avoid this additional load bearing and the burnout, which could have an adverse impact on the student. The whole idea for this particular policy is to ensure that there's a complete development of a student. But if the programs are not being scheduled or being implemented the way it should be, or for the purpose, the way for which it's being introduced, then it could be a complete fallout.
A student can only pursue 2 full-time academic programs in the physical mode, provided that the class timings for one program do not overlap with those of the other. This will also be only applicable to lecture-based courses, which include undergraduate, postgraduate, and diploma programs. Meanwhile, PhD and MPhil programs will not fall under the scheme. But what about exams and course loads? How will students manage that? Experts have told Business Standard that 3 broad challenges would arise. First, how would the students manage their timetables? Secondly, universities will have to ensure that multiple simultaneous exams don't occur. And third, having to quickly switch focus between diverse subjects would be a challenge in itself for some students. However, universities at their own end should be able to address these issues. Ahmedabad University Vice Chancellor Pankaj Chandra told Business Standard that each institution would have to decide on how it would count courses for multiple degrees. This would be critical in ensuring that students do not have to take double the time to complete 2 degrees, since that would defeat the purpose of the idea in the first place. Chandra said that it was critical that the students striving to complete 2 degrees should not be overloaded with too many subjects at the same time, as that would seriously hamper their learning.
I feel that rather than doing it completely in a physical mode, if it could be done in a hybrid mode, where it could be done in a physical and an online or both online, whichever way, I think this permutation combination would definitely help both the institutes to execute such programs and as well as for the youth or for the students to undertake such programs, because they will be able to manage the timelines, they would be able to manage the load, and even they would spend time in developing the knowledge rather than just doing it everything in a jiffy. So I think the hybrid mode of implementation of these 2-degree programs would definitely be would be required to ensure that it does justice to this policy or this initiative.
Meanwhile, highlighting the challenges of this move, a national daily has said that allowing students to pursue 2 full-time programs in physical mode could prove to be problematic. It argued that academically gifted students or those with economic resources could corner seats, which can be scarce to begin with, in 2 high-demand courses. That is indeed a problem worth considering given India's poor college density.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the college campuses, let us see what is happening on Dalal Street. With Monday's 1.7% fall, the NSE Nifty has shed nearly 6% from its recent high in just 8 trading sessions. As rising bond yields, hawkish policy stance, and weak earnings outlook cloud sentiment, here's what the near-term trajectory for the markets looks like.
The week began on a dismal note at the markets as earnings disappointment by index heavyweights Infosys and HDFC Bank triggered a sell-off in IT and financial stocks. A spike in WPI-based inflation to 14.55% in March also weighed on the investor sentiment. At close, the BSE Sensex and the NSE Nifty 50 declined 2% and 1.7% respectively. The Nifty IT tumbled 4.6% and the Bank Nifty shed 2%. The HDFC duo, that is HDFC and HDFC Bank, along with Infosys, accounted for more than 70% of the day's losses on the S&P BSE Sensex. Infosys registered its biggest intraday fall in 2 years as it tumbled over 9%. The stock eventually ended 7.3% lower at 1,621 rupees. Other major losers were HDFC, HDFC Bank, Tech Mahindra and TCS, down in the range of 3.7% to 4.8% on Monday. According to Naveen Kulkarni of Axis Securities, the markets will continue to witness volatility in FY23, especially in the first half of the year with rising interest rates globally and high inflation expected to persist. In this scenario, he expects money to move from long-duration debt funds to equity funds in the second half of the year. Kulkarni is positive on metals, hospitals, hospitality, oil refining, and capital goods sectors, but believes discretionary consumption, IT, and BFCs may underperform. Given the fall in indices wherein the NSE Nifty has shed nearly 6% in just 8 trading sessions from its recent high of 18,115. The next major question on investors' mind is that will the indices decline further or shall we see a reversal? To get an answer to that query, we have with us Avdut Parker of Business Standard for the technical outlook on the market.
The benchmark indices BSE Sensex and Nifty 50 violated the 200 days moving average with a strong gap down on Monday, indicating weakness and a cautious outlook. The 200 DMA for Sensex comes to 57,515 and for Nifty it is 17,160 levels. The current trend seems uneasy. However, when looked at from a bigger perspective, one could easily see breakout for the Sensex was at 55,500 and for Nifty it was at 16,500 levels. So one could easily see, or one could say, this current weakness or current correction could be an opportunity, considering 55,500 and 16,500 to be the breakout mark for a long-term perspective. In terms of Nifty Bank, it did violate 200 days moving average, which was placed at 36,800 levels, and this index, Bank Nifty, is also indicating weakness. However, there is a gap up closing which was at 36,000 mark. So as long as Nifty Bank trades above 36,000 level, one could see this index regaining the bullish sentiments. For Bank Nifty, especially for the Bank Nifty, 38,000 remains the breakout mark.
That apart, on Tuesday, shares of ACC, L&T Infotech, Mustech and Tata Steel long products are likely to be in focus as the companies are scheduled to announce Q4 earnings.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the market's mayhem, let us see what is troubling Twitter. The company is trying to fend off a hostile takeover bid by one of its shareholders and world's richest man, Elon Musk. And for this, it has invoked an old strategy called the poison pill. What is it, and how will it limit Musk's ability to raise his stake in the social media company? Let us find out.
A poison pill strategy gives existing shareholders the right to purchase additional stock at a significant discount, thus diluting the holdings of a new hostile investor. It is officially known as a shareholder rights plan. Twitter's poison pill will stay in place for a limited duration of 1 year. The shareholder who triggers it will be blocked from making these discounted stock purchases. Twitter's spill would be triggered if a shareholder acquires more than 15% of the company in a deal that is not approved by the board. Twitter said the move aims to enable its investors to realize the full value of their investment by reducing the likelihood of any one person gaining control of the company without either paying shareholders an appropriate control premium or giving the board more time. Twitter's board is still assessing Musk's offer, and it would only put it to the company's shareholders for a vote after approval. Musk, on his part, had said that his current non-binding $43 billion buyout offer was partly contingent on completion of anticipated financing. Musk currently owns 9.1% of Twitter. If he were to increase his holding to more than 15%, Twitter's defense strategy will flood the market with new shares that all shareholders except Musk can buy at a discounted price. This would instantly dilute Musk's stake, making the takeover way more expensive. The strategy also gives Twitter more time to evaluate Musk's offer and can force him to directly negotiate with its board. Twitter emphasized that its poison pill will not prevent the board from engaging with parties or accepting an acquisition proposal at a higher price. Meanwhile, Musk tweeted that if the current Twitter board takes action contrary to shareholder interests, they would be breaching their fiduciary duty. Twitter's action would not bar Musk from taking his offer directly to its shareholders by launching a tender offer. The poison pill would prevent most Twitter shareholders from selling their shares to him, but the tender offer would allow them to register their support or disapproval of Musk's offer. Such a tender offer does not require board approval. If Musk gets enough support for his tender offer, he could claim that Twitter is acting against the interest of its investors. Poison pill strategy has been quite effective in checking hostile takeover attempts, which have reduced considerably since the 1980s, when most companies did not have the provision in place.
यार आइसक्रीम खाएं? नहीं यार, कुल्फी।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
अरे SBI contactless debit card? I agree.
SBI is the banker to every Indian.
Film rental firm Netflix had also resorted to the poison pill strategy in November 2012 to prevent takeover by billionaire investor Carl Icahn. That's all for today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.